Independent examiner finds Celsius ticks every Ponzi box. An independent investigation has determined that now-bankrupt crypto lender Celsius Network was a Ponzi scheme by using client funds to buy up its native token and inflate price. Since September, former prosecutor Shoba Pillay has examined claims that the crypto lender was misappropriating funds and defrauding investors. Pillay, a partner at law firm Jenner & Block, was appointed as an independent examiner by US bankruptcy judge Martin Glenn, who oversees Celsius's Chapter 11 bankruptcy case. The executive summary of Pillay's 689-page report states that Celsius's promises of trust, transparency, and financial freedom were a complete lie. The report concluded, quote, "Behind the scenes, Celsius conducted its business in a starkly different manner than how it marketed itself to its customers in every key respect," end quote. 34 people were interviewed as part of the investigation, including Celsius's former chief executive and founder, Alex Mashinsky, current and past employees, customers, and business partners. Reports say Celsius misused millions of client funds in Ponzi scheme. Since the middle of March 2020, Celsius has been secretly timing its purchases in order to prop up the price of Cell significantly, the report said. By June 2021, Cell's price, quote, increased by 14,751%, end quote. Celsius's inner circle made millions in profits from the hefty share of tokens soaring in value. Chief executive and founder Alex Mashinsky has reportedly sold at least 25 million Cell tokens since 2018, worth at minimum $68.7 million, despite repeatedly denying his dumps to the public. To keep Celsius's token value stable during major sales by early investors, Celsius, quote, often increased the size of its resting orders to buy all of the Cell that they were selling, end quote. All the while, employees were aware and increasingly urging executives to adopt proper procedures. Quote, "We are using users' USD coin to pay for employees' worthless Cell, all because the company is the one inflating the price to get the valuations to be able to sell back to the company," end quote. One employee was quoted as saying in Celsius's Slack channel. Celsius spent at least $558 million buying its own token, the newly published report revealed. Since 2018, Celsius reportedly transferred at least 223 million Cell from the secondary markets to its own wallets, more than the 203 million Cell released into its initial coin offering. Basically, Celsius bought every Cell token ever created, quote, at least one time, and in some instances, twice, end quote. Celsius couldn't afford to keep buying back all of its own sales, so it decided to use customer-deposited Bitcoin and Ether to pay for it instead, the report said. Only the company failed to keep track of how much it was stealing from whom. In 2021, it found itself missing a bunch of Bitcoin and Ether that it suddenly needed to buy in order to keep up with customer withdrawals, right when the price of Bitcoin and Ether was soaring. It allegedly decided to use client deposits to buy approximately $300 million in stablecoins to correct this shortfall, a band-aid on a leaking ship. Quote, "As a result, Celsius was left with a hole in its balance sheet of stablecoins rather than Bitcoin and Ether," end quote, the independent report stated. Quote, "That hole continued to grow as a result of Celsius's continued buybacks of Cell and the significant losses Celsius suffered on some of its deployments in 2021, end quote. Celsius owes millions in bills and taxes. The report highlighted how Celsius executives exacerbated mounting liquidity issues by refusing to lower ridiculously high reward rates, turning to high-risk investments to increase yield, and accepting FTX's own propped-up token as collateral. Indeed, Celsius enjoyed close ties to other controversial crypto projects Tether and FTX. Pillay stated in the report that certain borrowers, including Tether, Alameda Research, and 3 Arrows Capital, enjoyed limits sometimes twice or 3 times greater than standard. At one point, Tether's exposure grew to $2 billion and was deemed an existential risk internally. Celsius was eventually forced to pause customer withdrawals in June to avoid insolvency. Had it not done so, quote, new customer deposits inevitably would have become the only liquid source of coins for Celsius to fund withdrawals, end quote, Pillay's report stated. For the most part, Celsius had enough remaining reserves to satisfy the remaining outstanding withdrawals. But occasionally, the firm did indeed, quote, directly use new customer deposits to fund customer withdrawal requests, end quote. Investigators further uncovered almost $14 million in unpaid utility bills in its mining arm, Celsius Mining, as well as, quote, significant tax compliance deficiencies, end quote. A suspected $23.1 million in taxes remains outstanding, while $3.7 million has been reserved for, quote, potential VAT liability, end quote. For more informed news, follow us on Twitter and Google News, or listen to our investigative podcast, Innovated Blockchain City.